Hello, everyone, and thank you so much for tuning in. Listen, I want you to know that no matter what someone says or how frustrated you get with the banking industry and the credit industry and the loan industry, I want to let you know that it's not your fault. Whatever debt you may have, however low your cash flow is, it is not your fault. Right? Were indoctrinated in type of a slave system. And so that lack of knowledge is what placed us in these positions. And now it will be the gaining of knowledge that will take us out of that slave system into the master system. And I want to show you the very fundamentals on how you can do that in your life starting today. You understand? All right. So I know you have a lot of debt. It doesn't matter what that debt is. Okay. We're going to go ahead and start out small. Let's say you got a debt of $20,000 left on your student loan, your car loan, your mortgage. It doesn't matter. Okay. We do know that it's scheduled, meaning it doesn't matter how much you place toward that loan. You're still going to owe the same amount month after month after month. $20,000, you owe $1,200 a month. Okay, well, what if I pay $5,000 one month? Okay, thank you. Well, how much do I owe the next month? $1,200, right? That payment's not gonna change. But this is where Velocity Banking steps in and holds your hand. So your loan, we're just gonna symbolize it as a big old circle, okay? And your loan is 20K, all right? That's a 20K loan, right? Now, we're going to roll over here and we are going to use our line of credit to pay that loan right off, okay? Now, contrary to popular belief, you don't need a thick line of credit. Matter of fact, you don't need a line of credit at all right? You just need to know how to pay the loan. And we're going to show you how to pay those gigantic loans, all right? Now, let's say you have a credit limit of 10K, all right? So we got 10K right here and 20K over here. How are we going to pay this loan? I mean, I already have debt over here, credit card debt over there. How are we going to pay this loan? Like this. You've got a paycheck, right? Don't focus on the amount. Just focus on the movement. Focus on the position of your income. Where is your income going? Is it going inside of a bank account, right? And let's just put that bank account in between them. Is it going into a bank account, and the C stands for checking, that as you keep your money there, it's losing value? Every time you place your money there and keep it there, just think of this, all right? That's what it's doing. It's losing value. Your money is, while it's out in the checking account. That's why we got to get it out of the checking account as soon as possible. Well, CJ, I mean, that's where my income goes, all right? What are you talking about? Get the money out of the checking account. Where am I going to put it? You're going to put it inside of an entity or a tool, a banking tool that is actually going to make you money instead of cost you money, like with the checking account. You do know that we're at what, about 8% inflation now? My goodness. We need our money to work for us, all right? So we're not going to keep it in our checking account. We are not going to keep it in a savings account. We're just not going to do that. Why? Because it's stagnant. That's why. It stays there and it does not grow. We want the money to do something for us. You see, money is a soldier, and soldiers are trained to fight. We need our money to fight for us, okay? So instead of your income, don't focus on the amount, going inside the checking account and staying there. That's why I call it the black hole account. We're going to have this checking account go into the line of credit. Now, in order for the money that's in the checking account to go into the line of credit, you've got to spend this first. All right. So go ahead and pay those expenses. Yeah, absolutely. Pay those expenses from your line of credit so that you can pay them back with your income. All right. Now, I'm going to show you, and I go over this extensively in my Velocity Banking 2.0 class. It's amazing. So I'm going to show you the formula that we use to calculate your cash flow. Are you ready? All right. This is how you calculate your cash flow. It's going to be income, you got that? Which will be represented by the I. Expenses, represented by the E, equals C, cash flow. So I minus E equals C. Income minus expenses equals cash flow. And that cash flow, right, is what is going to pay that line of credit back. All right. So let's say you have the $3,000 worth of expenses. You have the $5,000 as the monthly income. So 5,000 minus 3,000 is $2,000, right? Because 5,000 is the income minus 3,000 is the expenses. $2,000 is the cash flow, right? Okay. So we spent the, 3,000, okay, from this line of credit, which means what? What does that mean? That means now we have a balance of, that's right. So this is the limit, okay? 10K is the limit, which means that's up to our limit. So $3,000 is going to be the balance, all right? So if we have a $3,000 balance because we have the expenses, okay, and we quickly replace that with the $5,000, we have nothing to be concerned about because, we get paid $5,000, right? No big deal. Now, what we want to do here, since we have a pretty substantial, it's small, but it's pretty substantial in terms of this loan, we want to make sure that we're utilizing the greatest amount, and some of you need to be paying attention to the credit utilization. So how much are we going to use of our 10K towards this loan principal? How much? 2,500? Hey, that's good with me. Why not? Hey, that's under 30%. We need to be concerned about that. Now, for those of you who aren't concerned, that's great because you recognize that credit reports and credit scores, they go up and down and it's no big deal for you. Congratulations. That's higher level thinking. All right. So we want to go ahead and use, let's just say $2,000. Okay. And we're going to chunk the principal. Folks, always remember, chunking the principal is what it's all about. All right. So we're going to utilize this $2,000 from the 10K. We're going to chunk that principal. What is $20,000 minus $2,000? $18,000. Now, how much is the interest going to be calculated on? The $20,000 or the $18,000? The $18,000. You see, the smaller the principal, the smaller the interest. And that's the secret of paying off the loans with the line of credit, and even if you didn't have the line of credit with the checking or the savings account. Folks, I can't wait to get your feedback. Please give me the problems so that I can solve them. All right? Listen, thank you so much for tuning in. Get my class, Velocity Banking 2.0. It's going to be in the description below. If you can't get a card, don't worry. We got the cards for you. It's in the description below. It's like one of the first ones, all right? Because I know that priority that you have on those cards and needing to get those lines of credit so you can implement this method right away, all right? Listen, tell your friends, like, share, and subscribe. God bless, and you have a great night.